Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm speaking to you from New York City on this, the 22nd day of May, 2018. Before I talk more about today's show, let me remind you that I am the editor of Jay Taylor's Gold, Energy, and Tech Stocks, and that you can subscribe to my letter by going to miningstocks.com, or call our office during normal work hours in New York City at 718-457-1426, 718-457-1426. Would also like to encourage you to consider subscribing to Chen Lin's excellent newsletter by going to chenpicks.com. Chenpicks.com. Chen is an occasional he's an occasional guest on this show and provides some very interesting ideas, especially in the area of biotech and energy. Also follows some of the mining stocks. So we'll have Chen on from time to time, but chenpicks.com is where you should go to learn more about what he does and to sign up for his letter. I want to thank each of you for listening to the show, making it one of the more popular shows in the Voice America Business Channel, and also to encourage you to send along your questions, criticisms, praises, or whatever comments you have to questionsfortaylor@gmail.com, questions4taylor@gmail.com. We do want to thank our sponsors for making this show economically viable. Our sponsors for today's show: RN Resources, Balmoral Resources, Bonterra Resources, Genesis Metals Corp., Klondike Gold, Northern Empire, and Novo Resources. Well, you should know that our sponsors are really only by invitation. It isn't enough for companies to simply have the money and want to come on as sponsors so they can tell you their stories, but these are companies that I have, in every case, have invested my own personal money in, but also have covered them in my newsletter, Jay Taylor's Gold, Energy, and Tech Stocks. So they're companies that I really like, have a good feeling for, and that's why they are here as sponsors. I should say much the same modus operandi is applied to the Metals Investor Forum, where the companies that are there only by invitation of the newsletter writers. Now, the Metals Investor Forum, I'll be getting on an airplane tomorrow morning to attend that event in Vancouver on May 23rd and 24th. If I got that right, that's the 24th and 25th, I'm sorry, of this month. So I'm heading out there tomorrow morning. Actually, I'm told it's 95% sold out. I did check a minute ago before coming on the show. There are still a few seats available. But if you're in the Vancouver area and can attend this and are interested in these companies, I would strongly suggest you go to jtaylormedia.com, click on the Metals Investor Forum banner, and just simply put in your email and name, and you will be assured a seat at the Metals Investor Forum at the Georgia Hotel in Vancouver. The seats, it's a free event, but as I say, the seats are limited. They do provide a lunch and a breakfast for all the attendees. There's an open bar after the conference closes on Friday and Saturday. I'll be speaking at 11:30 on Friday. The title of my talk will be 2018, A Year of Epic Market Disruptions? ? And part 2. I suggested that would be the case in my speech up there in January. And we will see. I mean, the equity market continues to do okay. We're going to be talking more to our guests today about that and where they think this market is going, where various markets are going. I will be examining in my speech, I'll be talking really along the lines of what Alistair McLeod has talked about here, having to do with the credit cycle. It's not a business cycle, really. It's a credit cycle. Activities and markets are driven by money creation, not by the natural ebbs and flows of nature, but rather by the manipulation of those natural flows primarily by the Federal Reserve, central banks, and also, of course, governments that stimulate and I would argue create a great deal of damage long term by their actions. But in any event, I'm going to be talking about where I think we are now in this credit cycle, and in fact, that's some of what I'm going to be talking to our two guests about in a few minutes from now today as well. Also sharing the stage with me in Vancouver will be the four companies that I have invited to this event. Klondike Gold Corp., they are a sponsor of this show. They have the massive gold target, some 55-kilometer strike length of favorable structure and evidence of gold along the way. We've had Peter Talman on this show in the past, not too long ago, to talk about it. He'll be back again, but he'll be on the stage with me to provide an update to the attendees there on Klondike Gold Corp. Balmoral Resources is another company I've invited there. They'll be sharing the stage with me. They are a sponsor to this show as well. They have a very sizable nickel deposit that I think is grossly undervalued as far as the market price of the company goes, but they are also outlining a very sizable gold target, a gold project, actually have some high-grade near-surface resources that have been delineated just recently that I think are very impressive, although the market doesn't seem to be paying much attention, as is the case with almost all the junior mining companies these days. The market the gold shares are very much out of favor, and I would suggest very strongly, in light of what we're going to be talking about the rest of today's show, that now might be a really good time to take a serious look at a lot of these companies. Another company that will be sharing the stage with me in Vancouver is Telson Resources. They have been a sponsor in this show in the past. That's a company that stock chart looks pretty good. It's looking pretty good because they are actually in the process of building and restoring and putting back into production 2 mining projects in Mexico. And they're doing very, very well with those projects. They are actually, before they've gone to commercial production, they are generating some cash flows from bulk samples that they've been mining, bulk mining that they've been doing. But expect to go into commercial production, I believe, next quarter for one, or at least by the end of the year. I think next quarter for the one mine, and then at the end of the year for the other. So doing very well, Telson Resources. And last but not least, Skeena Resources. It's a company that I've really come to appreciate. They are in the process of putting back into production, or at least exploring and developing the very high-grade Snip gold deposit in the Golden Triangle of British Columbia. And this is a project that was mining incredibly high grades of gold in the past. The issues that they had, though, when the price of gold went to $200 and some dollars, they were actually mining something like 14 grams or 12 grams per ton cutoff grades. Incredibly high-grade resource still remains there, but now, in addition to the fact that the price of gold is around $1,300, they also have infrastructure advantages, electric power that goes to the site, and roads and highways that can get access roads that get you right to the site. So Skeena Resources is another company that I like a whole lot, and I've invited them also to the Metals Investor Forum. Now, again, seats are limited. It's free, but go to jtaylormedia.com to make sure that there's a place for you if you can make this event. And I would love to see you. And if you're a listener to this show, please make sure you let me know when we rub shoulders there. As far as news for the sponsors in this show goes, Novo Resources is expected to report assays from its first bulk sample from its Comet Well project in Australia. Now, this is something the market is obviously looking forward to. The stock's been trading very, very well. I'm exceptionally pleased with that. Of course, if there should be disappointing results, we could expect the stock to drop. But, time will tell. I mean, this is one of the most exciting, one of the most unusual gold deposits that I have ever come in contact with, and I've been following the junior sector since 1981, just to give you an idea of how long I've been at this. This is potentially the next Witwatersrand deposit, and as Dr. Henning said on this show, when I asked him how could the market be pricing your shares so high, he said, well, he thinks that people want to have a chance to profit from this if things work out as he believes they can. I'm not going to say that he believes they will, because I think nobody knows for sure until more work is done, but it is a very, very exciting story. And then Northern Empire, I should mention Michael Allen will be on this show next week. He's the CEO of that company. And this is a project that I actually went out to visit a couple of months back in southern Nevada. They are in the process, I think, of outlining what could be an enormous gold deposit. They are next to Corvus, which is really outlining some very high-grade material, but also Northern Empire has had some very, very strong assays along over a sizable strike and various targets that they are looking at on their project in southern Nevada. So this is another story that I'm extremely excited about. Of course, I personally own both of those stocks as well. I've titled today's show, Are We Entering a Secular Bear Market in U.S. Treasuries? David McElveny and Michael Oliver will return. A massive defiance of nature's markets has been underway thanks in large part to the big lies of Keynesian economic theory. Keynes suggested that saving isn't important and that governments and their central banks can simply print wealth. They can print money and create wealth. That theory was tested in spades ever since the 1930s, but after 2008 and 2009, it was really tested in spades. And that took the world to that experience in 2008, 2009, which was a buildup of Keynesian economics, took the world to the edge of financial destruction, total destruction financially. I mean, it was really a frightening time. If those of you can think back a few years, yes, over a few years, we tend to forget how difficult things were. But if you go back and revisit history, you'll recall. Now, banks are starting to lend now. Again, they've forgotten. Central banks are recognizing now, however, the need to reverse course and pull money out of the economy by selling their treasuries back into the market. In other words, the Fed is downsizing its balance sheet. Keynesian economics were tried in the 1930s, as I said, for the first time in American history. Didn't work out very well. The Depression drug on for about 10 years until World War II came along, but never did the proponents of Keynesian economics ever suggest that there was a problem with Keynesian theory. Instead, people like Ben Bernanke and virtually every economist with a PhD behind his or her name suggested that policy was simply not executed properly or insufficiently. It wasn't enough dosage of money pumped into the system to make it work. And so, after 2008 and 9, which was the most serious market crash since 1929 and the deepest recession since the 30s, a massive manipulation of the market was undertaken by the Fed and other central banks around the world on an unimaginable scale, thus setting up the next economic earthquake, which will likely be larger than the 2008-2009 episode, just as every decline has been more severe than the prior one since the 1930s. The problem is that excessive debt is never permitted by the monetary authorities to be extinguished, so that with each credit cycle, debt to income in the system grows to the point where the lifeblood of the global economy is being drained out of the system. Now, David McElveny will join me at the end of the second half of today's show. He will address the issues with the Federal Reserve trying to unwind the excess debt that they've created to downsize their balance sheet. We're going to explore with him what that's going to mean and how that's going to play out in light of Trump's $1.2 trillion deficit next year and another $600 billion of money that's being drained out of the system by the Fed. Who's going to save? Where is the money going to come to finance the Treasury, at least at these interest rate levels? And what will it do to the economy when interest rates rise to the levels they need to rise in order to finance the budget? Or will the Fed simply go into another massive printing episode that makes the 2008-2009 episode look like child's play? Well, we're going to talk to David about that, but also we want to ask him, how should we prepare for it? Most people don't see it. Most people are oblivious to it. The financial the system and the people on Wall Street don't really want you to think about it, but we would be foolish to put our heads in the sand. I think it's always better to know the truths, even if they're unpleasant, than to ignore them so that we can prepare for the times that lie ahead.